In this video, we're going to look under the hood of CHPY, the YieldMax Semiconductor Portfolio Option Income ETF. We're going to examine all of the individual stock holdings, not just the top 10, and rank them on a scale of very bullish all the way down to very bearish, so you'll have a better understanding of this very popular ETF. Stay tuned. CHPY is hugely popular, with over $1.1 billion in assets, and the fund has only been around since April of 2025. Money has been pouring into the semiconductor space, and this fund has benefited greatly from that enthusiasm. For those of you not familiar with CHPY, its goal is to create weekly income with a secondary goal of capital appreciation. They make their money selling call spreads, and recently have been paying around 40 or 45% annualized rate. The prospectus says it can hold about 15 to 30 publicly traded semiconductor companies. As of the date of this video, the holiday weekend of the 4th of July, the ETF is getting close to full with 28 stocks in its holdings. This video is not about the mechanics of how CHPY makes its money or how good of a job it does selling options. The focus of this video is the underlying holdings, the 28 stocks that YieldMax has chosen for CHPY to invest in. If you follow my small account margin trading videos, you might remember that I purchased CHPY in February of 2026. Here's a look at the price return year to date of CHPY compared to QQQ and SPY. And as you can see, this YieldMax ETF has done exceptionally well, up almost 41%. The Qs are only up about 16%. And it gets better if you take a look at total return, where CHPY is up almost 75% year to date, compared to the Qs at about 16.27%. However, things haven't been looking so great recently. Let's go back to price return and change from year to date down to 1 month. We get a totally different picture. CHPY is down almost 8.75%, performing worse than the Qs and SPY. Let's go back to total return and reduce it down to the 1 month period. Things look better, but CHPY is still doing worse than the Qs, and definitely worse than SPY. So it makes me wonder, is the semiconductor sector fizzling out? And what about all these companies that CHPY has invested in? To create this tier list ranking, I'm using the equity summary score methodology provided by LSEG StarMine, as found on Fidelity. Here's an example for Visa, which has a neutral rating, 6.2 out of 10. I'm not going to get into the details of how these rankings are created, but I will provide a link to a PDF document found on Fidelity that anyone can view. You don't have to have an account to see this document, and it provides in-depth explanation, but on a very surface level, this is an aggregate rating based on different ranking firms or individuals. It's not a simple average, it's a lot more complicated than that, and it rewards those analysts who've done better in the past. It requires at least 4 independent firms. Not all analysts rate all firms, and a couple of the stocks that CHPY owns don't have an equity summary score. It's also important to note that these ratings are relative and not a forecast of future performance. A top ranking doesn't mean it's going to make money. It just means that the analysts think that it's going to do better than companies with a lower rating. And it's very important to know that these rankings change all the time, daily even, as different analysts update their ratings. So this is really just a snapshot in time for the 4th of July holiday weekend. Here's a look at how the tiers are ordered numerically. I'll keep the stocks in order even within a tier. So any stock in the top left is ranked higher than stocks to the right of it or below it. And one more thing, this is not financial, investing, or any other type of advice. I'm not suggesting that you buy, hold, or sell CHPY or any of the single stocks about to be discussed. You need to do your own due diligence or consult a professional if you have questions. As I mentioned earlier, 5 of CHPY's holdings do not have an equity summary score. I've highlighted the 5 here. This is likely because there are not enough analyst ratings to compute the equity summary score. Here's the blank chart where we'll begin our ratings. We'll start off by adding these 5 unrated stocks at the top, since they don't belong in one of the tiers, and this will remind us that we haven't forgotten them. Let's take a look at how these unrated stocks have performed recently. We're looking at the year-to-date price return chart for these 5 companies, and there's some eye-popping stats here, with several of them returning well over 150% and one over 200%. Let's take a look at the 1 month chart, and we're seeing some big swings, with a couple of these down double digits. But we can't rely on the equity summary score from LSEG StarMine to see what the current sentiment is for these stocks going forward. For the first of the rankings, we'll start off in the neutral tier. There's only 2 firms in this tier, ON Semiconductor at 6.0 and Broadcom at 5.5. Here's a look at the year-to-date price return for these two stocks. One is up over 68%, and Broadcom is just about 4%. But if we look at the 1 month period, they're both double-digit negatives, minus 29% and minus 25%. Next, we're going to drop down to the bearish tier, where we have three stocks: ACM Research at 2.3, Synopsys at 2.2, and NVIDIA at 1.8. Back to the charts for the year-to-date price return for these three bearish stocks. ACMR is up impressively at 147%. S&PS is down about 7%, and NVIDIA up about 4.5%. Let's take a look at things more recently in the 1 month chart, where we see two of these stocks are down double digits, and ACMR's return has come down substantially. If we zoom into just last week, we see ACMR was part of the recent big sell-off. Now we'll jump up to the bullish tier, starting off with Taiwan Semiconductor at 9.0, just 1/10 of a point from the very bullish tier, followed by Lattice Semiconductor at 8.9, Applied Material at 8.7, Intel at 8.7, NXP Semiconductors at 8.5, Qualcomm at 8.5, Monolithic Power Systems at 7.6, and Marvell Technology at 7.5. There are a lot of stocks in this tier. I've highlighted the stocks in the bullish tier so you can see where their weightings stand relative to the other stocks that CHPY owns. Intel and Marvell are both top 5 holdings. Because there are so many stocks in this tier, I've broken them out into two different charts. Let's start with the year-to-date price return for the 4 highest stocks in this tier. And again, we have some gigantic numbers, with stocks up over 3 digits. The lowest on this graph is TSM, up almost 43%. Here are the other 4 holdings. Not quite as impressive, but Marvell is up over 188%. Let's take a look at the 1 month chart. All 4 of these stocks are double-digit negatives. If we switch back to the previous 4 and go to the 1 month chart, it's a little bit of a different story. 2 of them are negative, but both single digits, and 2 of them are double-digit positives, with Applied Materials up over 23% in this rough last month. Now we'll turn our attention to the very bearish tier, the lowest of the lows. And guess what? CHPY does not have any stocks with an equity summary score in the very bearish category, which I think is pretty impressive. So that leaves us with the very bullish category, and there are a ton of them. Micron leads the way at 9.9, followed by ASML Holding at 9.8, Texas Instrument at 9.6, Astera Labs at 9.5, Microchip Technology at 9.5, Teradyne also at 9.5, Analog Devices at 9.4, AMD at 9.4, KLA at 9.1, and Lam Research also at 9.1. This has become a very top-heavy chart. I've highlighted in yellow all of the holdings in the very bullish tier, so you can see how they stand in the weightings. Lam Research is the number 1 rating, and AMD is also in the top 5. Again, since there are so many stocks in this category, I had to break it down into 2 different charts. The first one has the top 5 very bullish stocks. This is price return year to date. Micron's up over 240%. All of these have healthy returns. The lowest is 32.8%. If we look at the bottom half of the very bullish tier, also incredible returns, ranging from 39% up to about 142% for AMD. Here's the 1 month for these stocks. 3 of them are negative, with KLA up about 15%. If we go back to the top half of the rankings and go down to the 1 month chart, see a similar story. A couple are down and a couple are up. Going back to our tier list, I've highlighted in yellow CHPY's top 5 holdings, so you can compare them to the equity summary score ratings. Each of these represents a little over 5% of CHPY's holdings, so they add up to about 25.88%. Here are all of the stock assets listed again. There are 28 total, and the largest, Lam Research, is about 3 times the size of the smallest, ON Semiconductor. On the opposite end of the spectrum, I've highlighted CHPY's 5 smallest holdings. Combined, these only represent about 9.97% of CHPY's assets. You may be wondering how CHPY's dividend has held up year to date. Here's a graph of the dividend amount. It bounces around, but generally it's been flat or up and to the right. In this updated chart, I've added the actual price, not the price return, so you can see how the dividend bounces right along with the share price. Overall, the analyst sentiment seems to be pretty positive towards CHPY's holdings. Only time will tell if they're right, and if some of these ratings might start getting lower. But it's a pretty good snapshot in time of how analysts feel at this very moment. And remember, that may have changed by the time you're looking at this video. What is your outlook on CHPY? How would you rate it on this tier rating system? And are you planning to buy, sell, or hold? If you enjoyed this breakdown, I'd really appreciate it if you'd like and subscribe for further updates. If you're interested in my small account margin strategy, check out the first 5 videos in the series. I also have a similar tier ranking series for Roundhill single stock ETFs, so check that out too. And remember, nothing I said here today is financial, investing, or any other type of advice. Good luck hunting those infinite dividends. Take care.